Part C says Madarax Limited is an e-business company that trades solely over the internet. In the year 2023, the company made sales worth 15 million shillings. All sales were on 30 days credit to commercial customers. Extracts from the company's most recent statements of financial position relating to working capital are as follows: trade receivables, trade payables, bank overdraft. Additional information. 1. In order to encourage customers to pay on time, Madarax Limited proposes introducing an early settlement discount of 1% for payment within 30 days, while increasing its normal credit period to 45 days. Number 2, it is expected that on average 50% of customers will take the discount and pay within 30 days. 30% of customers will pay within 45 days, and 20% of customers will not change their current paying behavior and will pay within 60 days. 3. Madarax Limited currently orders 15,000 units per month of product P, demand for which is constant. There is only one supplier of product P. The cost of product P purchases over the last year was 540,000 shillings. 4. The supplier has offered a 2% discount for orders of product P of 30,000 units or more. Each order costs Madarax 150 shillings to place, and the holding cost is 0.24 shillings per unit per year. 5. Madarax Limited has an overdraft bank facility charging interest at the rate of 6% per annum. Assume 365 days in a year required. Roman 1. Calculate the net benefit or cost of the proposed changes in trade receivables policy and comment on your findings. 6 marks. Roman 2. Using suitable computation, determine whether the bulk purchase discount offered by the supplier is financially acceptable. Comment on the assumptions made in your computation. 6 marks. Roman 2 now is the other side of the coin. This business is selling on credit, but the business, is it buying on credit? Look at Roman 2 says, using suitable computation, determine whether the bulk purchase discount offered by the supplier is financially acceptable. Now let's analyze this one. This one is debt management of debt, management of debtors. In Roman 2, in answering Roman 2, we will rely on additional information 3. Look at note 3. Madarax Limited currently orders 15,000 units per month of product P, demand for which is constant. There is only one supplier of product P. The cost of product P purchases over the last year was 540,000 shillings. 4. The supplier has offered a 2% discount for orders of product P of 30,000 units or more. Each order costs Madarax Limited 150 shillings to place, and the holding cost is 0.24 shillings per unit. Now you can see, candidates, now this question is testing your knowledge on inventory management. Inventory management. Here we are talking about stocks. So it was 2 in 1. The candidates were tested on management of trade receivables, and management of inventories. Do you realize that? It's important for you to realize that. If someone who asks me, which topic is that? It's good to think that way also. This is inventory management. Still working capital management. And working capital management is an investment. Working capital is simply the investment in inventories, trade receivables, and cash. Okay? Now, what is the formula? What is the formula? I'll give you an opportunity to answer that one. Every problem has a formula. Every problem can be solved in a certain way. What is the formula? In determining whether the bulk purchase discount offered by the supplier is financially acceptable. That is what is required. So what is the formula? This is the question. This is the question. Acceptable. That's why I'm using the term acceptable. Determine whether the bulk purchase discount offered by the supplier is financially acceptable. To determine, then you need to calculate the net benefit of accepting the bulk order. So what is the formula? That's how you should be thinking all the time. This is the question. In our previous question, this was the question. So this question, what is the answer? How do you arrive at this question? How you arrived at the answer is what we call formula or approach. And every question has its own unique formula in business. There are those that may be direct, like what someone is saying here, EOQ. EOQ has a standard formula. Here we are not to calculate, what you are calculating is not a standard formula, but you need to come up with your own formula. And your own formula can only be accurate if you have understood the question. So why students have a problem is setting the wrong question. Because someone sees orders, holding costs, then one thinks what is required is the EOQ. So you say EOQ is equal to. But you see the question is not on EOQ. And the examiner required, if the examiner was to be direct, because your examiner is not always direct, because the examiner needed to just say, what is the net benefit of accepting the bulk order? That is a direct question. Because the examiner sometimes does not ask questions directly. Look at how the examiner put the question. It says, determine whether, it's a very long thing, determine whether the bulk purchase discount offered by the supplier is financially acceptable. It's not direct. So that's why you need to take time and check what is the examiner. Don't look at the details in the question. Sometimes start by reading what is required. Do you understand? Yes. Now that you've understood, give me the formula. And if the examiner had asked the question this way, what would be your answer? Please, let me get your answers. Vincent says, bulk purchase using discount, less purchase without discount. So when we began candidates, I told you, when you see the word net, you are most likely comparing two things, adding things and subtracting. You cannot get net when you only have one variable, the way you are saying. You see, net benefit is equal to cost of discount minus. Look at the other one. Net present value is equal to present value of debenture minus. So this is net. What is the net benefit of accepting the bulk order? What is the net? So we are comparing two things. And it's almost similar to management of debtors in note number 1. We are here dealing with policies. This was trade receivables policy. This one is inventory policy. Inventory policy. And this policy, there is an existing policy and there is a proposal to change the policy. And the proposal in relation to bulk purchase discount. So if you are to get the net benefit of accepting, please, then you are comparing the current policy and the proposed policy. You are comparing the two. Okay, to get the net benefit. It could be a benefit, could be a cost. You understand? So anytime you see net, NPV, net benefit, you are comparing 2 or 3 things. Okay? So we are to calculate or determine whether the bulk purchase discount offered by the supplier is financially acceptable. So we have the cost of the current policy. This is equal to cost of the current policy minus the cost of accepting this bulk order, the proposed policy. That is the cost of inventory policy after bulk discount. Sorry. So the net benefit of accepting the bulk order will be equal to the cost of the current policy, the cost of the current inventory policy minus the cost of inventory policy after the bulk discount. We need these two things. Then we determine the net benefit. So let's now calculate the cost of the current policy. I saw some of you say order cost, something like that. Maureen says number of units bought divided by the units discounted. I know all of you are doing management accounting. Help us with your knowledge in management accounting. Cost of inventory. Candidates, cost of inventory. Let's begin with the current policy. Cost of inventory, we know, will be equal to the purchase price of the inventory. The purchase price when purchasing, you are likely to incur ordering costs plus ordering costs. Then when you go to the supplier, you will incur ordering costs, like you need to make a call, you need to send invoices, you may need to visit. All that involves ordering. There are examples of ordering costs. You make a call, you have an accountant who is preparing orders, you pay that accountant. So the cost of inventory includes the purchase price of the inventory, but related to purchasing, there are other associated costs like ordering costs. Then after you have ordered, the goods have been brought into the business, then there are also other costs which we call carrying costs, holding costs, storage costs, the same thing. Holding costs. Before you sell, these items have to be stored somewhere in a store. That store, they are, if depending on the materials or the goods that you purchase, you may need refrigeration, you may need to have a, if you are in a country where insecurity is very high, you need to have a security officer with dogs or guns, all right? You need to have surveillance, CCTV, storage, holding costs. You need to have someone preparing the store, cleaning the items, holding costs. So cost of that's the cost of inventory. So this will be the formula for that and that. I know you are management accountants. Give me the purchase price. Give me the purchase price. I've given you the formula. Abraham says 540. It's 540,000. What is the ordering cost? Ordering cost. Use your management accounting knowledge. Give me the ordering cost. Ordering cost. And it has to be the annual ordering cost. Ordering. Ordering. Abraham says 150. 150 is per order. So how many orders were made during the year? You multiply by the 150 to get the annual ordering cost. It is like buying motor vehicles in Kenya. The purchase price is lower than the taxes. Kenyans buy, the purchase price is lower than the amount you spend in ordering. You see, your ordering cost is 4.5 million per year, and the purchase price for what you've ordered is 540. It's abnormal, isn't it? But it's common in developing countries. Yeah, 150 times 15. I think that makes sense. How did you get 15? That is 15. Abraham, 15,000. Let me look at the question. Madrax currently orders 15,000 units. That is not the number of orders. Those are units. And that is units per month. But we have to calculate the ordering cost per year. The 15,000, you need to be very keen. The 15,000 is units per month. We need to calculate the number of orders. Number of orders. That tells me you've not done management accounting, or you have not done that topic. I expected you to move very fast on this one. Step number 1, put down the formula. Then you see this one is not in the question. You need to work it out. Cost of the current, you need to work it out. In working out, you see the items that you can pick from the questions. Others have to be worked out. So again, we need to have a working for annual ordering cost. What is the formula for annual ordering cost? To get the formula for annual ordering cost, when you are given the cost per order, then you only require to calculate the number of orders. Then multiply with the cost per order. Number of orders will be equal to the annual demand divided by the quantities ordered during every time the amount the customer orders, there is that amount that is ordered. Okay, and in this question you are given the amount. Madrax orders 15,000 units per month. Okay, so the annual demand, this we multiply by the cost per order. Let me put the formula down. The cost per order, CO, cost per order. Now to calculate the annual demand, we are told that Madrax orders 15,000 units per month. So it will be 15,000 units per month. How many months are in a year, please? How many months? How many? 12. So the numerator is the annual demand, the number of units ordered during that year. 15,000 divided by times 12. We divide by the number of items that are ordered. If the company is operating under what we call the EOQ, if it is economic order quantity, then we'll have it. But we've not told anything to do with economic order quantity. But I see some of you are saying economic order quantity formula. Abraham, we are not, there is no economic order quantities here. Okay, we do not have economic order quantities. But we are given the number of quantities that are ordered. It may not be economical. You may need also to check what is the meaning of economic order quantity. It is not economic order quantity. We are just told Madrax orders 15,000 units per month. So you get the total number of units ordered in a year, then you divide by the 15. This will give you the number of orders. That is the number of orders. Then you multiply by the cost per order. What is the cost per order? The cost per order, 150. Each order costs 150 times 150 shillings. That is the ordering cost. Do you understand? Are you understanding? Are you understanding? It was easy, but not easy. So Abraham, how much is it? Abraham says 1.8. 1.8. It's 1.8. 1.8 million. So this is 1.8 million. We add the holding cost. And it has to be the annual holding cost. Annual holding cost. Give me the annual holding cost. What is the annual holding cost? Why dividing 15? Why dividing 15? We are dividing 1500. 15,000, not 15. It is 15. This is 15,000. It is not 15, but 15,000. We are dividing the total units that were ordered during the year. And every time an order is made, 15,000 units are ordered. So if you divide the total demand with the quantities that are ordered every time, you get the number of orders. Then you multiply with the cost per order. That is 1.8 million. You thought it was to be divided by 30. You should not think DML. You just follow the information provided. 30,000, I think it is in relation to note number 4. Note number 4 is something else. Note number 4 says the supplier has offered a 2% discount. You see, that is something different. We are calculating the annual ordering cost under the current policy. Do you get the difference? Emma, so the answer is 1.8. Yes, the answer is 1.8. The answer is 1.8. DML, now that you got it, give me the holding cost. annual holding cost. Emma is asking, is it 1800 or 1.8? I think it's 1.8 million. Emma is 1.8 million. 1.8 million because it's 15,000 times 12. Is it 1.8 thousand? It's 1.8, not 1.8 million. I think, Emma, you are right. That is 1,800. It's 1,800. Correct? This is 1,800. You divide this, you get 1,800. Because this is, I think, 12 times 150. There are 12 orders. One order is 150 shillings. That is correct, Emma. Then give me the annual holding cost. Annual holding cost. If you have covered that topic, how do you calculate the annual holding cost? You are just going to use the same concept, the same razor blade. Please use this razor blade. It is almost the same razor blade. In Swahili we say wembe ni ule ule. Wembe ni ule ule. Omiti, half Q. Give me the answer. Half Q. Yeah, you are right. Half Q CI, where C is a C. What is CI? I prefer CH. Carrying cost. It's not CI but CH. Carrying cost or holding cost. Or HC. Yeah, HC or CC. Not CI but CC. Holding cost. Which language have they used? Holding cost. So use the same. You have an idea. Now give me the amount. You see how things are related. It's like we are doing management accounting. 31,250. How did you arrive at 31,250? What did you divide by what? Because we have the holding cost power. Look at note number 4. Is it number 4? Yes. Each order costs 150 shillings to replace, and the holding cost is 0.24. 0.24 shillings. That is the storage cost, or the holding cost, or the carrying cost. So to calculate the annual holding cost, you will multiply the units with the 0.24. What is the answer? Annual holding cost. Someone says 1.8. Omit 1.8. 1.8. So the formula, for the sake of those who have not done management accounting, we are going to have it Q. We are going to take Q over 2 times holding cost per unit, which is equal to the 1500. 1.5 we divide by 2 times 0.24, which is equal to 18. So this is 18. So what is the total cost of inventory? What is the total cost of inventory? Total cost of inventory. Total cost of inventory. What is the total cost of inventory? We have the purchase price plus the ordering cost plus the annual holding cost. What is the total? $543,600. 543,600. 543,600. 543,600. Is that true? 543,600 minus cost of inventory under the new policy. Please confirm. That's the answer. So let us calculate the purchase price, ordering cost, holding cost under the new policy. Under the new policy. Is that true? Is it 543? Yes. Can I rub the board? Can I rub? You've done that, so we don't need this. We'll use the same formula. Formula is the same. Annual ordering cost under current policy and old policy is the same. Now give me the ordering cost under the current policy where there is bulk discount. What is the ordering cost? What is the ordering cost? We know the annual demand does not change. The annual demand is constant. So this annual demand we know is constant. It's 1,500. Is it 1,500? Yes, times 1,200. 15,000 times 12. That will give us the annual demand. We divide by the quantity. Under the new policy, what is the quantity? Under the new policy, what is the quantity? So what is the order quantity under the new policy? It is written there in note number 4. The supplier has offered a 2% discount for orders of product of 30,000 units or above. How much is it? 30,000. So what is the answer? Ordering cost. 30,000 is the quantity ordered. Get the number of orders, then multiply by 150. Number of orders, then multiply by 150. It is true, this is 30,000. Under the new policy, this company will not be ordering 15,000 units, it will be ordering 30,000 units because there is a bulk order. You understand? It has gone up. It's 30,000. So this will give us the number of orders. Then cost per order is 150. Okay? So the formula here is still the same. Annual ordering cost, someone? Annual ordering cost? Is it your internet that is slow? Irene says 900. Yes, 900. Ordering cost 900. This is 900. How about the annual holding cost? You get the number of units multiplied by the cost. Holding cost is 0.24. So give me, yeah, you are right, 6 orders, DML, that is 6 orders, times 0.24. Is it orders? No, it's not orders, it's just 6. Q over 2 is not orders, DML. Yeah, it's 6 orders for annual ordering cost, correct? But you are now working on holding cost. You are right, 6 orders. Which is equal to 900. Now give me the annual holding cost. Annual holding cost. Kevin says 3600. Yeah, 3000 divided by 2 times 0.4, 3600. 3600. How about the purchase? The purchase price. So this is how this is calculated. 3000 divided by 2 times 0.24. That should give you 3600. We've done the annual ordering cost. We've done the holding cost. Give me the purchase price. 30,000. Give me the purchase price. So this should be 30. For those of you who are taking notes, let us be accurate. This is 30,000. 30,000. We need to calculate the purchase price under the new policy. You are not supposed to think. The information is given and it's direct. We read that in note number 4, the supplier has offered a 2% discount. Okay. So what is the, yes, 98%. So what will be the purchase price? DML, you are right. There are many ways of calculating it. So 98%. What will be the purchase price? It will no longer be 540 because there is a discount of 2%. The purchase price before the discount is 540. So the purchase price before discount, the purchase price before the discount is 540,000. And there is a discount of 2%. So 540,000 is represented by 100%. So less 98%. We just multiply this by 98%. That will give you the purchase price. It is less 2%. So if it's less 2%, then it's 98%. 98% of 540, DML says 529,200. 529,200. This is 529,200. So what is the total cost? What is the total there? Which is the total here? This is equal to 529. 529,200. Give me the total cost of inventory under the new policy. Total. Kevin says 533,700. 533,700. 533,700. 533,700. So what's the difference? The difference is the net benefit. The difference is the net benefit. 9,900. It's 9,900. Is it negative or positive? Is it negative or positive? The cost of inventory, that is the purchase price, ordering cost, and holding cost is 543,600 before the policy. After the the change in policy, the cost has gone down by 9,900. Therefore, this is a net benefit. If the company was to accept the bulk order discount, then there is a benefit of 9,900. So candidates were to using suitable determine whether the bulk order by the supplier is financially acceptable. So the answer is the bulk purchase discount offered by the supplier is financially acceptable because of the net benefit of accepting the bulk order. Then candidates were to comment on the assumptions made in the computation. Assumptions made in the computation. What are the assumptions? Give me two assumptions. We are just to give two assumptions. Each assumption is a half a mark. And you see, even if you didn't have anything to say, you could comment on the assumptions because the assumptions are constant. When you are calculating cost of inventory, the assumptions that are made. So what is your assumption? Correct annual holding cost is constant. That's what DML says. That is correct. What is the other assumption? So it is the holding cost and the ordering cost. So you can see from the question, the holding cost is 0.24 under the old and the new. The ordering cost again is also constant, 150 under the old and the new. So one assumption is that the ordering costs and the holding costs are assumed to be constant, which we know is unlikely to be true in reality. Another assumption made here is the annual demand. The annual demand is assumed to be constant, whereas in practice we know that there could be seasonal and other changes in demand which may occur. So those are the two assumptions, or even three. Annual cost is assumed to be constant, ordering cost is assumed to be constant, annual demand is assumed to be constant. Questions? Ask questions. We've answered these questions. This is 6 marks. The other question here is also 6 marks. 6 marks. 1, 2, 3. They are marks for workings. 6 marks. Do you have questions? Is there anything you've not understood? If you can understand this one, then you can understand any other. For the other questions I've seen, they are very direct. Questions that have been tested before, quite direct. And I see most of you have been answering questions. I'm very impressed because I know with just a bit of effort in practicing the past paper questions, you should be able to be scoring all these marks. It's possible. Right? Any question? Anyone? Any question? The name advanced does not mean complicated. Advance means continuation. To advance is to continue. It's not complicated. So that's why topic is in advance. The topic we are covering, like the capital budgeting, we have advanced capital budgeting. You advance. Okay. When you say so and so is advanced in age, doesn't mean the person is complicated. No, it means that the person has lived for long. So advanced means you are covering what you are not covered in intermediate level, because it's not possible to cover everything. So that's why you learn bits, then you go to the next stage, you learn more. All right. So this level may look trickier because you are studying, for example, working capital management for the first time. You are studying advanced capital management for the first time. When you get to the advanced level, what you are studying here is the same. We've seen the examiner testing questions from the intermediate level. Like the other setting, there was a question in advanced level on capital ratio, what you've just covered. And there are times when there are questions from advanced level which may also be tested in financial management because the concepts are the same. So by mastering all these concepts, you are making your life easier when you get to advanced level. Okay? So financial management is just financial management. In practice, there is no advanced financial management. It's just financial management. Do you understand? When you get into practice, we do not have advanced financial managers. No, they are just finance managers. And maybe CASNEP should consider changing the word advanced to something else, right? In fact, during our time, subject like financial accounting, we used to call it financial accounting 1, financial accounting 2, financial accounting 3. But you see today they are calling it financial accounting, financial reporting, advanced. But it's just accounting. We do not have advanced financial accounting managers. No. Management accounting is just management accounting. When you apply for a job, you are called management accountant, finance manager, accountant. You understand? So what you are learning now is what you will just meet in future. Time value of money, valuation of financial instruments, the formula is the same. So anyone who told you that advanced financial management is difficult is one who didn't attend the lessons that you are attending. All right? You have 30 days. 30 days times, these are days. How many hours are there in a day? Hours, 24. So you have more than 72, is it? Days. Yeah. So you have many hours ahead. Okay. So I think it's just in August when you have the exams and you are doing well. I hope to meet you in our next session. If there is no any other question, we've done questions on working capital management. We've done questions on capital management. We've done questions on evaluation of instruments. I think we've covered almost each of the areas. I'll be looking at, when we meet next time, a topic that we've not covered. So what you do, please go back to the past papers, attempt questions, revise questions on, for example, working capital management. This question, there was a question on management of debtors and management of inventory. There are questions again on management of cash. So you see, the examiner nowadays is very clever. He's trying to set questions from all the topics. Like this one has been split. There's a question on working capital, yes, but he's covered all. It's possible to have a question on all those aspects. So go back to the question papers, take advantage of our revision books, which I think we have revised up to, is it, I think April 2024. So thank you. Bye-bye.